What drives property price growth? That's what I'm going to discuss in today's episode of the Michael Yardney podcast. And then I'm going to have a chat with Kate Forbes about the surging population growth in Melbourne. Melbourne's likely already Australia's largest capital city. It just depends upon how you look at it. Now, that doesn't mean you can invest anywhere in Melbourne, but we're going to give you some ideas of what to look for when you're going to consider where you should be investing. So, welcome to today's episode of the Michael Yardney podcast.
Welcome to the Michael Yardney podcast, where twice each week you will learn a number of new ideas regarding success, property investment and money in around 30 minutes. Our show is brought to you by Metropole, who specialise in helping you grow, protect and pass on your wealth through strategic property and wealth advice. Now here's your host, Michael Yardney, Australia's most trusted property commentator who has once again been voted Australia's leading property investment advisor. That's the fifth time he's won a similar award in the last 7 years.
As a property investor, we want the type of property that's going to outperform the markets so that it's going to grow in value, increasing our asset base, and in time also increase our rental returns. So what drives property price growth? Some people will say it's supply and demand, but in my mind, that's too simplistic. There's a lot more to it than that. In a moment, I'm going to have a chat with Kate Forbes about a specific market, the Melbourne market, and how some of these factors are going to play over the next little while. But let's have a look at what the macro factors that drive our general property markets in Australia are. So I'm not talking about a specific property or even a specific suburb. So let's have a look at them. Number one, population growth. Well, that's what a lot of people say, but it's actually more household formation. How many new households are being formed and the demographics of those households, how they want to live, where they want to live, how much they can afford. Yes, long-term population growth is very important because if there's only a limited number of investment-grade locations where the supply is fixed, and if our population is growing and more people want to go there, this is obviously going to increase demand, and this translates to increased property values. So, yes, it is a bit of supply and demand, so scarcity is important also. It's the land component that appreciates. Not all land's created equal, so land closer to the CBD or closer to the water or closer to public transport is in general more valuable, and it doesn't really matter if there's a house or an apartment on the land. What you're really looking for is the land to asset ratio. You want to buy the type of property where a large component of the price is the land to asset ratio. But again, we're not talking as much about property in this chat at the moment. I'm talking about, in general, what's affecting the property price growth of our markets, and the scarcity of good locations is one of the factors. Another factor is affordability, but it's not what you think. I'm not talking about cheap properties. I'm talking about the flow of money, interest rates and money supply. That's very, very important. So we've seen it recently as interest rates drop, the property market picks up. Go back a couple of years and the RBA and APRA were too aggressive in their approach, and they also forced the banks to become more aggressive in their lending criteria, and that slowed down the markets. But those factors are slowly being loosened at the moment. So when money supply increases, property values go up, and when money supply decreases, that has a negative impact on property price growth. The economy in general is very important for the growth of our property markets because the economy creates jobs. Jobs create people who can afford to upgrade their home, buy cars, grease the wheels of industry. So we like to hear that Australia's economy is doing well. We also pay attention to what's happening in the world because Australia doesn't work in isolation. And then the more local economy of the states and the suburbs that we're looking at in buying properties. So what I'm doing is going through the major drivers of property price growth. And we've talked about demographics, household formation, affordability, scarcity, the economy. And there's another big one, and that's market sentiment. How people feel. So a year or two ago, the fundamentals were actually pretty good, but people were worried about an upcoming election and changes to the tax laws, and so therefore they sat on the sidelines. Our property markets are driven by fear and greed. In general, the markets are driven by owner-occupiers. 70% of properties are bought by owner-occupiers, and they push up the market. But when fear or greed comes into the market, when the investors come into the market, we get this big swings, don't we? Past performance, I guess, is also an important factor to consider when you're looking at drivers of property price growth. The best evidence of a good property location is really going to be its long-term past performance, not the last week or two or the last month or two, or not even the last year or two. So at Metropole, we go back over 40 years looking at the statistics of locations and how they've performed. And then you've got to make sure that they're still the same locations, because clearly some are gentrifying and things have changed. But past performance is a good indicator because the main value drivers rarely change. The proximity to amenities, to shopping strips, to schools, to hospitals, they rarely change. Another driver of our property markets are the returns people get. In other words, what sort of capital growth you're going to get, what sort of rental yield you're going to get, what sort of returns you could get on alternative investments. So currently, when interest rates are low, when alternative investment rates are low, you're not going to get as much capital growth or rental growth. And then there's one other factor that crops up all the time. Well, not expected, and that's what we call the X factor, that factor that comes out of the blue, either in the positive or the negative, to drive our property markets. Last year, there was a positive factor, the miracle win of the federal election. This year, at the beginning of this year, already we've seen a number of tragic X factors, things that came out of the blue that are going to put downward pressure on our economy. Things like the tragic bushfires and the coronavirus. Middle East tensions at the beginning of the year seem to have already come and gone, and that's what tends to happen. These things do come and go, but for the short term, they affect our mood, they affect our sentiment, and they affect our economy. So what I've just done is go through a number of the drivers of property price growth at the macro level. And then I'm sure you remember my top-down approach. We start with seeing how each state's performing in its own cycle. Then within the state, we only invest in capital cities. We only like investing in suburbs that are in general going to outperform because of the demographics there, suburbs that are gentrifying. We look at the right locations within those suburbs, the right streets and the right properties. In a moment, I'm going to have a chat with Kate Forbes about the Melbourne property market, but that's definitely not the only place to invest, and you'll hear why I believe so in just a moment. I'm biased. I think Melbourne's the best place in the world. Now, when I speak to my business partner, Ken Race in Sydney, he thinks Sydney's the best place in the world, and Brett Warren believes Brisbane is. But I can tell you that Melbourne keeps winning the Most Livable City award, and it's going to become Australia's largest city sooner rather than later. So to discuss what that means for property investors, should you invest in Melbourne? And if you should, where in Melbourne? Let's have a chat with Kate Forbes, National Director of Property Strategy at Metropole. Welcome, Kate.
Thanks, Michael. As always, it's a pleasure to be here.
The latest forecast from the Australian Bureau of Statistics suggest that Melbourne's population is going to overtake Sydney sooner rather than later. But depends how you measure it, Kate. Maybe Melbourne's already Australia's largest capital city.
It's really interesting when you look into how they actually define what the boundaries of the capital city are. And there are various definitions, and then the numbers juggle around a bit in there. But if you look at greater capital cities, the Bureau of Statistics includes Central Coast and the Blue Mountains in its definition of Sydney, but it leaves Geelong out of its definition of Greater Melbourne and includes Mornington Peninsula, Kings Lake, Gisborne and Warburton. But Geelong's massive and left out of there. And if you add Geelong back in, then Melbourne might already be larger than Sydney.
Melbourne's growing at a faster rate than any other capital city or regional city. In fact, faster than most developed countries in the world, also growing at 2.4% per annum. So if you fast forward 4 years, Melbourne's population is going to increase by around 10%. It's adding 327 people a day. It's drawing residents from around Australia, in fact, around the globe. 65% of our population growth is due to overseas migration. Kate, Melbourne grew by 1 million people in the decade between 2008 and 2018. And Sydney at that same time only grew 800,000 people, Brisbane only 450,000 people. So some people are saying that makes Melbourne, because it's growing, a great place to invest in property. What would you say to that?
On the whole, and a very simplistic answer to that is yes, but then it gets a little bit more complicated. You don't only look at population growth as a driver of property price growth. Simply because there's population growth doesn't mean that it's a great investment destination. However, for pockets of Melbourne, and for Melbourne to a large degree, that has been the case. And actually, if you look at Melbourne's property performance over the last 4 decades, it has been the best performer in Australia on units as well as in houses. It's outperformed any other capital city in Australia. But it's specific suburbs in there that have outperformed other suburbs in there. So it's not a blanket performance. And you could say that the whole of Melbourne grows the same way, or that it's just population growth that's driving it.
Okay, so you've dug into the statistics of all the capital cities, and as you clearly said a minute ago, over the last 40 years, on average, Melbourne's grown just over 7% per annum, 7.9% per annum for houses, a bit less for apartments. So property values have, on average, doubled every 10 years, which means half did and half didn't, I guess. Sydney also has had just above 7% growth over the 40 years, and Brisbane a little bit less than that. But we're not buying the whole of Melbourne, as you started to say. We're not buying the whole of Sydney or the whole of Brisbane or any capital city, so you've got to dig much deeper into it. Before we do that a bit, though, why this significant growth? Why has Melbourne done so well, and why is it continuing to?
As you said, Michael, world's most livable city in there, so there has to be some drivers in there. I'm not quite as biased as you, because you know that I really don't like the weather here, but clearly everyone else disagrees with me, and that and a significant economic growth and jobs in Melbourne over the alternatives in the rest of the country, as well as the affordability relative to perhaps Sydney. So I think those have been the major drivers of growth into it. It's about 31% of the population growth in Australia is attributable to Melbourne, and contrast that with only 20% of the population. So it's out of kilter, or punching above its weight in terms of pulling in number of people.
I guess one of the factors is that we have got the ability to spread geographically north, south, east and west, maybe not as much. Well, there's the bay in the middle, while Sydney's much more constrained geographically by water, by hills, by national parks. Sure, Brisbane can actually grow from the Gold Coast in the south up to the Sunshine Coast in the north, which gives it ability to create lots of new land as well. So that's one of the things that people are saying, well, I'm going to invest in these growth corridors of Melbourne because that's where all the young families are moving. That's where all the growth is. What do you say to that, Kate?
It's precisely the availability of that space and the ability to sprawl out that will, I guess, constrain your price growth.
Why is that?
There's a lack of scarcity there. You just keep going and you just keep rolling it out. And there's always new estates being released, and too much competition and inability to actually force those prices up. You need to have the scarcity of being landlocked or knowing that there's no more available land in order for those prices to be going up. And if you can just keep going out, which Sydney can't, as you said, and a number of other areas can't, it is going to potentially, place a ceiling on how fast those prices can grow.
Now, we're going to get into Melbourne a little bit more and some of the challenges and some of the opportunities, but maybe it's worth just explaining, because we're sort of half sounding negative and half positive, and it may confuse some people. Buying the right property in Melbourne, in my mind, is a good investment. But if you can't afford the Melbourne market, that doesn't mean it's the only place to invest.
It isn't the only place to invest, and you wouldn't choose to invest in Melbourne simply because that's where the greatest population growth is going to come from. If you couldn't afford to buy in the areas that are going to give you that consistency of outperformance closer in to the CBD, because with this massive growth comes social issues and infrastructural issues that are perhaps going to knock us further down the perch of being the world's most livable city. For those in Melbourne now, it's pretty difficult moving around. As our population continues to grow at this pace, just wait, it's going to become even more difficult to move around. And anybody who has the ability to pay for it is going to choose to be that much closer in. If I couldn't afford, or if our clients can't afford to be in those blue chip suburbs closer in, we'd much prefer that they went to equivalent destinations in either Brisbane or in Sydney. And also there's other factors in play apart from just projected capital growth rates when you consider where you should be putting your investments.
Well, just following on something you suggested a moment ago, Melbourne is becoming economically, and I guess unfortunately socially polarised. The wealthy don't like to commute, and they tend to live in the inner and the middle, more established suburbs, and cheaper housing on the outskirts is attracting more young families. But that comes at a cost. These outer suburbs have got less infrastructure, less amenity, fewer jobs, meaning workers are having to make longer commuting trips to work in where the majority of the jobs are, the inner and the middle ring suburbs. I've also read studies that are showing that there are more health issues, physical and in fact even mental health issues in some of the outer suburbs because of some of the infrastructure and other changes. Now, I know when we had a bit of a boom before the slowdown a little while ago when interest rates were lower, it made it easy for young families to afford houses in these outer suburbs. But it seems moving forward, the lack of wages growth is likely to stall future property price growth in these areas. And in my mind, Kate, the gap between the value in the inner, more affluent suburbs and the outer suburbs is only going to increase moving forward.
There have been a number of commentators through the years who have suggested that you're quite right, that gap will get larger and larger from here. So the sooner that you are able to get into those closer in suburbs, the better off in terms of your asset growth. We hear it on the radio constantly and on the TV, and there's always programs going on about how long it's taking people to commute from those outer suburbs into the city. Some people are facing 1.5 to 2 hour commutes in a single direction. And if you look at all the studies on happiness and things, they say that the single quickest way to boost your happiness is to shorten your commute. Perhaps, Michael, that's why you say that the wealthy don't commute. Well,
you and I have got the luxury of living very close to our offices in Brighton. But the one big advantage of those long commutes, Kate, is you can listen to the Michael Yardney podcast and listen to all the back episodes of it as well. But there's only so much you can listen to of me as well. So I hear what you say. One of the challenges is the affordability of buying in the inner and middle ring suburbs of Melbourne. What sort of properties do you recommend to your clients in those suburbs?
We are seeing an increasing happiness, and if not an active choice, to live in smaller properties and to trade less space for being closer to whatever it is that's important in a person's lifestyle. Tenants are doing it as well as owner-occupiers. So if you are going to be looking at those closer in suburbs, it might be necessary to look at villa units or townhouses, or perhaps in Brisbane they're called duplexes and the like. So it's slightly more compact living, more lock up and go, but there doesn't seem to be a lack of demand for those properties, and perhaps a shortage of them relative to the apartment stock that's come aboard that is much less in demand.
Well, apartments have performed really well in the past. Interestingly, in the last decade in Melbourne, they haven't performed as strongly as, I guess, anyone who invested in apartments would like. I believe that's partly related to the significant oversupply of new apartment stock that's now going to dwindle out because there's very little new construction happening and there's going to be a shortage again. I think at the same time, there's a bit of a fright about the new apartments, those built out of paper mache in the last decade. They've all been tarred with the same brush, worries about cladding, worries about structural elements. So people are moving back to wanting to live in and buy established apartments. But in general, we like the dwellings with a bit of a land component, and villa units was a particularly Melbourne sort of thing that were built in the 60s and 70s for the retirees. But now a lot of young homeowners are buying them. I know you've invested in villa units, and I have also, personally.
Young homeowners, those who are desperate to be in a particular suburb and can't quite afford to jump straight into a house there. Anybody who is old or infirm and simply wants that single level dwelling in there, or the larger space that those properties afford over apartments, the outdoor areas of them. There's certainly significant demand for villa units. They've stopped making them, so the scarcity is there, and they don't perform capital growth-wise the same way that we've seen the apartments perform in Melbourne. And they have been a great investment for our clients.
Well, they perform more like houses because of the land component with them. So is Melbourne Australia's largest capital city yet? If not, it's going to be pretty soon. Melbourne's property market has been surging. It's had the largest turnaround after the downturn a year or two ago that it's had on recorded history. It's now reaching its previous peak and going to, by the end of this year, be much firmer, stronger, with higher values than it was at the beginning of this year. If you're interested in getting a foothold in whether it's the Melbourne, the Sydney, the Brisbane property market, because the team at Metropole don't care where. We've got no properties for sale. We just want to understand what your budget is, what your long-term needs and goals are, where you sit in your investment journey, what your risk factors are, what your cash flow is. And after putting a strategy together, only then will Kate and her team make a recommendation of where the right place to invest is. And Kate, I guess one of the things I've noticed with you and your team is just because people live in Melbourne, or just because you or some of your team members are here or they're in other states as well, that doesn't have anything to do with where you recommend one invests.
Certainly doesn't. The recommendation needs to be purely based on what is correct for that particular client's circumstances.
Yeah, so a better performing property in Brisbane, for example, is going to outperform a poor performing property in Melbourne. So why not have Kate and her team have a chat with you? Go to metropole.com.au and find out about our services, what we can do, the strategic advice we give with regard to property, with regard to wealth, property renovations, development, property management, financial planning, or buyer's agency, of course. Have a chat with our team, an obligation-free chat to see how we can help you along your wealth creation journey. Kate, thanks again. It's been fun having a chat.
My pleasure, Michael, as usual. Thank you.
Well, there was some great information from Kate Forbes there, but I wanted to point out that if you choose to buy in the outer suburbs to start off with, in the hope that, well, I'll start there and then I'll eventually move to the big smoke, to the inner suburbs, to the more affluent areas that we were talking about, that strategy tends not to work. The trouble is the gap between the outer suburbs and the inner suburbs is only going to grow more in Melbourne, Sydney, Brisbane, in fact in all our capital cities. So buy the best property you can afford. No question about that. And if you can't afford Melbourne, then my suggestion is, rather than buying in the outer suburbs, go to somewhere like Brisbane, where you can buy, for the same price as the house in the outer suburbs, a great house in the inner suburbs of Brisbane. There are multiple property markets in Australia. So while we discussed Melbourne, again, our point is, it depends upon your budget, it depends upon the stage of your investment journey, it depends upon your strategy and your risk profile. And when you have a chat with the team at Metropole, that's all the factors, in fact a lot more factors than that, we put into the mix before we make an investment decision for you. So thanks for listening to today's show, and if you enjoyed it, if you got some benefit from it, please click the share button on your podcast app and tell somebody about it. Our audience keeps growing, and I love to see the increasing statistics. It's fantastic, because my message is valuable to, I hope my message is valuable to so many people, and I want to get it out to as many people as possible to make more Australians financially independent. If you want to tell the world, why not leave a review, 1 star, 5 star, whatever you like, on Apple Podcasts or Spotify or wherever you listen to this. And if you do, and if I read it out, I'd like to say thank you by gifting you one of my books. And Mushuman left a review recently saying, informative podcast. Definitely a very informative podcast that stands out from the others. I suggest a more condensed episode to be shorter to the point. Michael's a great public speaker, and I find sometimes he repeats himself across episodes. Very happy I came across the podcast. So look, thank you. There's some honest review, and that's what I need, because yes, you're right. Probably we do say the same thing too often because the fundamentals don't change, but I guess I've got to understand that most of our listeners listen to back episodes as well. So I've taken your advice on board. If you want to get a copy of one of my books, is my way of saying thank you for your advice, Mushuman, just email me, michael@metropole.com.au. And if you want to keep in contact with me in between episodes, why not go to propertyupdate.com.au and subscribe to my daily newsletter? Or you can follow me on social media, Michael Yardney, and in particular lately I've been having fun on Instagram. I'd love to find out more about you. Catch up with you real soon. In the meantime, have a great week. Make it a great week.
Thanks for listening to this episode of the Michael Yardney podcast, which was brought to you by Metropole, who help their clients grow, protect, and pass on their wealth through strategic property and wealth advice. If you like what you heard and don't already subscribe, you'll find us on iTunes or on your favourite Android app as the Michael Yardney podcast. Watch out for our next show, which comes to you twice a week, and you'll learn some new ideas about property investment, success, and money in around 30 minutes. To get more of Michael's thoughts, go across to www.propertyupdate.com.au and sign up for his daily morning briefing, and you'll hear from not only Michael, but a group of leading property success and money experts. And just a reminder that the information you heard in this show today is general educational advice and not specific investment advice, as we don't know your personal circumstances. If you're looking for specific advice, why not ask the team at Metropole to help you?